You were listening to chartingwealth.com for Thursday, the 27th of August 2015. Hey, this is the way the markets have been looking lately. We actually had a lot of up and down movement on the chart over the last many months, but it doesn't look like it now with the crazy down move that occurred on the two-day candle back on the 24th of August. But let's break things down a little. What we see happening now is after that big two-day down move, over the last 2 days, we actually have what looks more and more like a spinning top. We basically have some up movement. We had some up movement today in the market of 3.66%. But again, all of that up movement is totally contained sort of in the middle and just a little bit of the middle of the big down candle that happened over the prior 2 days. And again, we're looking at a 2-day chart. I'm explaining it to the folks that are listening via audio and don't have the ability actually to see this in real-time video. However, we had a crossover. It wasn't like we didn't see this coming. We had a crossover going down on the chart on the 18th. That was the 2-day candle for the 18th. It played into the 20th, and then the big down move on the 24th started on that Friday, the 21st, and then the 24th, that Monday. And of course, the derivative oscillators continued to heat up, and we've continued to have a greater divergence between the MACD, the moving average convergence divergence line, and the signal line. So what's actually going on? Well, let's break down this to the half-day chart. And what you basically see happening over the course of this week, we had all the big movement down was pretty much in the morning on the 24th. That was Monday. Then in the afternoon, we've got sort of a green candle with a little bit of up movement. Then we had more up movement on the morning, then down, that is the following morning, the 25th, and then down movement that afternoon, some down movement this morning, and then a little bit of up movement toward the end of the day. Like I said, for the day, the total market was up 3.66%. Now, what does all this mean? Well, let's break it down a little further and see where things are going. Now, our 2-day chart does appear that when we look at the 4-hour chart does appear that there might be a bit of a coming together, at least on the short chart, and maybe an up move in the future. We see the derivative oscillator losing its speed, and we see the MACD and the signal line coming together, but that has not happened yet. The markets are still roiling and a little shaky. Now, let's go back to our 2-day chart, and let's take a look at SPY. What do we see there? Well, we look at our 2-day candles. We see a red candle down somewhat on the 20th, and again, our crossover happened again back on the 18th. This wasn't unforeseen at all. The markets were already in a down move on our big chart. We then saw the huge down move on the 24th and even more of a down move, even though technically for today the SPY was up 3.88%. Our 2-day candle shows a continued down move in the SPY. Now again, SPY is the S&P 500. This is a trust that parallels those moves. This is an ETF, actually, an exchange traded fund. But the total market is different. It includes all of the stocks. So SPY is a smaller piece of the market. A big piece, to say the least, 500 of the big companies in the S&P index. But again, interesting to look at. If we break that down further and go from the large 2-day chart to the half-day or 4-hour chart, we see SPY breaking down big time. Well, it broke down originally on the shorter chart around the 20th of August and then moved down with all that substantial down movement like the big chart on the 24th in the morning, and then some up movement in the afternoon, some up movement in the morning of the 25th, then down movement that afternoon of the 25th, and then this morning, and I say this morning is Wednesday morning, some up movement, and then the afternoon, basically a doji. What is a doji? That is the up movement, the down movement are about the same, and you just sort of have a line on your chart when it comes to the candlestick chart. And what does that mean? Well, it means a lot of indecision. Where are we right now on the short chart? We're in a confirmed down move, although it does appear that the MACD and the signal line are moving together, getting closer, could be coming together, signaling an up move possibly, but that again is in the short chart, not the big chart. Derivative oscillator is also losing its speed. So it's important to watch these things and figure out what's happening. We've seen over the last several days, last couple of days, that there's been no movement greater down than what happened on the first big down move the morning of the 24th. So maybe it's hit a bottom. We don't know that yet. We're not calling that yet because we don't have a crossover going up. That may be what we see in the coming days. So hang tight, pay attention. That's why we read the charts, right? We pay attention to the charts, not the noise of the media and everybody else. Okay, we're going to the Qs now. That is the NASDAQ 100, called the Cubes, the QQQ. That's its stock symbol. Now, it again is an ETF, and it represents the NASDAQ 100. What do we see there? Well, we called this one, crossed over on the 10th, going down on the 2-day chart, continued to move down, and in fact, we made a nice play when it rolled back up on the short chart, that is the 4-hour chart, and then rolled back over. You can, well, it's hard to see it at this point, but there was a, well, no, you can see it on the MACD on the far left-hand side of the screen. Those of you who are watching, those who are listening by audio, I'll explain. On the afternoon of the 14th, going into the Monday, the 17th of August, we saw a crossover on the short chart going up. That was okay. The large chart was still going down, but what that set us up for was getting into a down move, because when the short chart rolled back over, paralleling the already happening down move in the big chart, the 2-day chart, that was our signal to look at getting in sometime around either the, really the morning of the 20th. And for the people who got in, did their virtual trades, and again, we always say virtual trades, we don't give advice on real money trading. You make those decisions yourself. We're not a stock calling service. But for those of you who are learning and did your virtual trade, you did very well come, well, the rest of the week on into Monday. Because what happened? Well, that down move continued to move down substantially. And what have we seen happen? Well, since then, the market has basically flattened out on the 4-hour chart, and we have not really gotten below a closing on the 4-hour chart of what, about $100 and some odd cents, right at $100 on the Qs. Now, it looks like the Qs might be getting ready to cross over, going up on the Qs. What does that mean for us? It means that we might watch it cross over and start to move up. And again, if it loses that speed and rolls back over again, what does that mean? More down moves coming. Might be another point to get into the market on a virtual trade. So let's keep watching the Qs, okay? What is our trick here? It's to make money. It's to not lose money. It is to make money, read the charts, do what makes sense, and put money in your pocket. Now, let's go to, lastly, we're going to flip back out to the 2-day chart. We're going to look at gold. What do we see with gold? Well, gold is interesting. We've talked about this the last couple of days or so, how gold made some incredible up moves after it crossed over, as we called it, going up at the candle moving on into the 12th. We saw it cross over. We've got a nice 2-day trend line that we've drawn that is being breached at this point. We can see where the market closed today, right on it on the 2-day chart. The gold has stopped its upward movement. Now, we still have the MACD is showing us that we still have a confirmed up move in gold. The derivative oscillator is still high. It's lost a little bit of steam. But as we turn and we look at gold on the 4-hour chart, the half-day chart, what do we see? Well, we do see that gold closed below. That is below our 2-day trend line. Did make a little bit of up move toward the end of the day, but it did go below, crossed over, going down, and the derivative oscillator is heated up pretty substantially. And that crossover pretty much paralleled the MACD and the derivative oscillator, which is usually a good sign. That's going to be a stronger move. Now, if you look at how accurate the 4-hour chart has been for gold, you will see that that's not necessarily a bad chart even to trade off of. So those of you who are doing your virtual trades, the minute you saw that crossover, I hope that you went ahead and bought in, either in the afternoon on the 25th or sometime, hopefully not at the low, during this morning, and are watching your inverse gold fund that you bought in virtually go up in value. Or, of course, if you were in gold, hopefully you took your profits at the top of the move and you've gotten yourself out and aren't writing this one down. We want to see, though, what happens. Now, again, just for the record, gold is in a confirmed up move on the 2-day chart, but it has rolled over on the 4-hour chart. And this 4-hour chart for gold has been a pretty darn good chart, a little different than our other indexes. Well, our indexes that we look at. Gold, of course, is a commodity. It's not a stock index. So that's where we are at the close of the day on Wednesday the 26th as we go into Thursday the 27th of August. Thanks so much for joining us. Again, we've got a great short course available at the website on trading. It's about 15 minutes or so. It will give you great information so that you know even more of what I talk about every day. Please go and listen to that. We'd love to hear your comments and feedback on it. It won't cost you a dime. You don't have to give us an email address to get it, blah, blah, blah. You can just go listen to it. You can also find it on our Facebook and Twitter feeds, but we would appreciate you signing up for our newsletter where you get all of our training and our daily reviews, plus our weekly review and forecast. If you're interested, if you're not, hey, that's okay. Thank you so much for listening to chartingwealth.com. God bless you and your family. Wish you the best in your investing. Don't let the market take your money.